Hey guys, what is going on? Welcome back to my Robinhood portfolio. Hope you guys had a fantastic day of trading today. And again, want to thank you guys for the support on the channel. If you like the content, if you like the video series, feel free to like, share, and subscribe if you're so inclined. And if you are a subscriber, make sure to hit that bell button to get alerts and updates on all new content posted on the channel. Today I thought I'd take a look at the worst stock in my portfolio, probably the worst stock in the stock market over the past 1 year. And that is the stock up on screen, GE General Electric. As you guys may or may not know, this company has been struggling mightily over the past 1 year. You can see the past week it's down 4%, the past month down 15.47%, past 3 months 16.97%, and over the past 1 year it's down 23.08%. And if we take a look at a good S&P 500 stock, you'll see that this is in stark contrast to the overall market, not only in the market segment that GE is involved in, but also the overall stock market as a whole. You can see here I have Vanguard High Dividend Yield ETF pulled up, VYM. This is a very good S&P 500 ETF. And you can see here the overall market. Again, VYM is a very good stock to take a look at how the market has done overall. Good market representation of the entire market, especially of blue chip high dividend yielding stocks. And you can see here the market is up 19.08%. A lot of the other S&P 500 stocks are up 20% or so. You can see here SDY 18.41, SCHD 20.36, DVY 17.27, and these are all good dividend yielding ETFs that have a very good reflection of the overall S&P 500, especially again VYM here. But if we scroll back over to GE, you can see here it's down 20% in light of the fact that the market is up 20%. Again, overall, for the past 1 year, it's down 23.08%. There's a number of reasons why this has happened. Just to kind of take a look at my portfolio, you can see here, luckily I only have 10 shares, 212.60 for equity value. The total return in the middle, you can see there, 21.86% in the red, and that is accurate. I have not done any day or swing trading with this stock, so that is an accurate reflection of the total return that I've had the stock as long as I've held the stock. So 21.86% in the red, real money 59.48. Today's return, you can see there, 1.12%. If we go down to the statistics here, you can see it's got a good dividend yield, 2.943%, which is actually around about 4% or so with the downturn of the stock price. The market cap, you can see here, at one point it was over 230 billion. It shed quite a bit of its market cap down to 186.15%, or excuse me, 15 billion. Still a very, very large company, but a company that is in dire straits right now, struggling mightily, like I said. And this is also kind of summed up here with the Q3 earnings. You can see here in the light red on the right there, expected earnings per share, expected EPS 49 cents, but the actual EPS was only 29 cents. So did not make that expected EPS by a long shot. It was actually 20 cents under what the industry thought the profits would be, earnings per share for this particular company. So again, the actual earnings per share, 29 cents versus 49 expected. If we scroll back up here, I want to focus on the dividend. So I think the dividend is really what's going to drive the price of the stock moving forward. There's been a lot of talk that this particular company is going to have a dividend cut. GE used to be a dividend aristocrat up until 2009 to cut its dividend. The stock price definitely suffered quite mightily at that point. And I do believe there is another another dividend cut for this particular stock. 2.943% last dividend payment. But again, with the stock price downtrending so quickly here, that's around 4 to 4.2%. But the stock dividend will be cut. So the dividend, I think, will be dropping by about 20 to 25 cents from 0.98 to 0.7 or so, 0.75, 74 or so. And I think when that happens, the stock price will drop quite mightily. I thought the stock price would have already priced in that dividend cut. I'm not quite sure that is the case. You can see over the past week, it's down 4%. Past 1 month, down 15.47%. So if anything, this is accelerating with regards to the stock price downtrending. So I was going to buy below $21. Not quite sure if I'm going to do that anymore. I'm probably going to be looking at $18 and $19 to jump into the stock. As you guys know, if you've watched my prior videos, I definitely love contrarian investments, basically buying a stock when others are running away from the stock, when others are selling. Great time to pick up stocks that you think can turn around their business. The company has installed a new CEO. A lot of the upper executives have also been rearranged and or replaced, but not quite sure if the company can turn this downtrend around in the short term, especially with that dividend cut coming. GE has been a very bloated company for quite some time. It has its fingers in almost every market segment. It doesn't have any real direction. A lot of the profitable segments of the company have been sold off to maintain some of its momentum with regards to its earnings. But I think that short-term outlook is going to hurt itself in the longer run, and that's really what you need to be looking at with regards to GE, a longer-term play. It may turn around at some point, but you're probably looking at a 2 to 3, maybe even longer time span for that to happen. And I don't believe the stock price drop has ended. I do believe once that dividend cut is enacted, once the market responds to that, then I do think it would be a great buying opportunity, a dividend stock. Again, with the dividend cut, it still will have a pretty good dividend yield. And as far as a contrarian investment, this would be the perfect time to get into the stock if you can sort of stomach the risk. There's very high risk with this type of investing, contrarian investing, because essentially you have to time the stock when it sort of is at its nadir, when it's at its lowest. That's very hard to do. If you jump in too early, the stock continues to downtrend, and you may have to hold that stock for much longer than you had originally anticipated. And if you do need to get out of that stock, then you're going to lose a lot of money in the short term getting out of the stock as it continues to trend down. So those are my thoughts on GE. I know a lot of you guys wanted me to do a video about GE, so I don't think I'm going to jump in. Original plan was $21. Don't think that's going to be happening now. Probably around $18 and $19 would be a good entry point. But I do believe the stock is going to continue to downtrend until that dividend cut is enacted. Once that is enacted, I think the market will fully price in that dividend cut. And I do believe it will start rebounding after that, especially if the new management, the CEO, and the upper executives can kind of focus the company and turn it around with regards to what its business plan is overall. It's been kind of up in the air exactly what GE wants to do. Like I said, it's sold off a lot of its profitable businesses for some reason. It has taken a drastic turn of approach from the prior CEO, which really grew the company quite dramatically back in the 90s. So hopefully they can get back to that particular mind frame, growing the company. And as the company grows, that stock price will increase. But again, I don't think that's going to be happening in the short term. I think probably a 2 to 5 year outlook is reasonable for GE to turn around. So again, not to make the video too long, that's kind of my thoughts on GE. Buying probably $18 to $19 will be a good buy. Otherwise, I do believe it will continue to downtrend until the dividend cut is enacted. Once that's enacted, I think the market will fully price that in, and then there will probably be a period of time where it's probably going to be baseline for a few months, maybe a year, and then after that, it'll start to rebound. So that's what I'm looking for. And again, $18 to $19 is where I'm going to be jumping into the stock, probably $1,000 or so, just to play out a little bit of a contrarian investment play. If it does trend up quite dramatically, I'll sell off as a swing trade. Otherwise, I'll be holding longer term to get a nice dividend. Even though it's cut, it's still going to be nice. And I do believe this is a good contrarian investment if the upper management, if the CEO can kind of focus the business a little bit more than it has been focused over the past few years or so. So yeah, not to make the video too long, I'll kind of end it there. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. And until next video, we'll see you then.